This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I am your host, Scott Meyers, and this week's guest is Dave Wolcott. Dave started his career serving the country as a captain in the Marine Corps, and in 2000, he and his wife won the baby lottery by having triplets, which inspired him to challenge the traditional financial planning advice of Wall Street. He then started a journey to understand how the top 1% were building their wealth. A serial entrepreneur at heart, Dave spent the next 20 years building several businesses, investing in alternative assets, and creating the Pantheon Holistic Wealth Strategy, the playbook to becoming ultra wealthy and having not only freedom of money, but freedom of purpose, time, and relationship. Today, Dave is the founder and CEO of Pantheon Investments and is more passionate than ever about helping entrepreneurs build wealth by passively investing in real estate and alternative assets that provide predictable cash flow, tax efficiency, and upside potential as a reliable alternative to the volatility of the stock market. Dave is the author of The Holistic Wealth Strategy, a framework for building real wealth and living an extraordinary life, and is also the host of the top-rated wealth strategy secrets of the Ultra Wealthy podcast. So without further ado, please enjoy my conversation with Dave Wolcott. Dave, so good to see you again. Welcome to the show.
Hey, Scott, grateful to be here to connect with you and your audience.
Well, I've kind of given everybody a background on yourself, your bio, your history, and a little bit about what you do. But if you would, why don't you fill in the gaps and then let us know what you're doing and how you're navigating this, challenging and interesting economy that we're heading into.
Yeah, absolutely, Scott. So probably like a lot of the listeners out there, right? I started my journey in a middle-class family and thought the recipe for success was to go to school, get good grades, get a job, and kind of follow that path. So followed down that path of conventional wisdom. I got into the Marine Corps, did the ROTC program, had an amazing experience in the Marine Corps. And I learned a lot of things that they really don't teach you, right, in traditional academia, things like leadership, integrity, and teamwork, right? So after that, I actually transitioned out into corporate America. And quickly thereafter, I was really dismayed, Scott. I lost that sense of purpose, that sense of mission, right? And kind of, fighting for a good cause. And at the same time, my wife and I were actually building a family. And on October 24th, 2000, we had a toddler, an 18-month-old toddler, and then we actually had triplets. It was completely crazy. I know anyone who's raised a child, having 4 of them all of a sudden, just completely blew my mind. And so quadrupling the size of my family really put me on this path to say, okay, how am I going to financially provide for my family, right? The goalpost just literally got moved way down the field, and I sat down with my financial planner and, he said the same thing they all say, right? Which is the market's going to go up, the market's going to go down, invest for the long term and you'll make 7%, right? So I was just so frustrated with that it really started to put me on this obsessive journey, which was to figure out how are the top 1% really building their wealth? Because I knew it wasn't as a retail investor in the stock market. So this is about 2000, as I said. So I started investing in alternative assets, got into everything from oil and gas to raw land, multifamily, retail, you name it, all kinds of different asset classes. I also built a tech consulting business and a few other businesses along the way. Fast forward 20 years, I founded Pantheon and I created the Holistic Wealth Strategy, which is the book that I wrote to really help other people figure out, what is the blueprint for building wealth outside Wall Street, right? Because we've all really been fed a crock that, just doesn't add up. So how can you have really a comprehensive system in a blueprint like the ultra wealthy have been utilizing for years, but many of us just, weren't aware of. So that was essentially how I created the business and created the book as well.
Well, and that's the reason why I'm so thankful that our schedules finally permitted to and allowed us to get together, because as you and I chatted when we were together in the room in Florida, I was really curious, and then also to do a deeper dive on how you were helping folks. And so You've heard that advice, you've seen the advice that other folks have given, and you've seen the lack of results that we all have. So I think you're telling the story that all of us have already heard, and the question always remains, I timed it wrong, and how do I get what that guy's got, and how do I get in the room with those folks, and understand what that looks like. And it's not that difficult, but at the end of the day, it isn't always right in front of us. So I wanted to spend the rest of our time really talking about that, because I'm just fascinated by what you've done and what you've created, and obviously the tribe that you've created is also on board and fascinated as well, and you've done very well for them. So let's talk about that. Start to reveal your wealth strategy, and let's share that with Storage Nation.
Yeah, absolutely, Scott. So really, I boiled it down to 5 simple phases. Okay. And the first thing that frames the entire thing up is really all about creating a vision statement, right? Unfortunately, so many people spend so much time actually planning a vacation than they do their financial future. And if you don't have a target, you're going to miss every time. Right. So the first thing is really getting crystal clear on, that vision statement for you and your family. I love to ask investors when we have a meeting, if, you had $1 billion, what would you be doing? Where would you be? And who would you be with? Really requires some deep thinking and reflection into getting some clarity around what it is you're really looking for in life. So with that as a backdrop, we move into phase 1, which is really, again, all about you, and it's all about mindset. I know you've probably talked to many investors, or, look, we're just rolling off of the holidays, and you go home and you tell people that, hey, we invested in this amazing self-storage deal. And, hey, how does that work? But a lot of people say, well, my financial advisor told me that was too risky, doesn't really make sense for me, so much of this comes down to mindset, right? You have to really have an open mind and start asking questions, right? Does deferring taxes, for instance, in your 401k until, you're 65 really make sense, because last time I checked, where the current debt ceiling is, there's got to be some way to get out of this, right? And the only way that the government is going to have is to raise taxes. So maybe it's not necessarily the greatest idea, right? So you have to begin with starting to ask questions. Also, many of us have limiting beliefs. We may have some scarcity mentality and things like that from our past or where we were brought up with. So it's really trying to change the dynamics of how you think and think with an abundance mindset, start to create goals for yourself, and then create habits that support those goals to really try to, move the needle on the trajectory of where you want to go. So it really starts with that mindset, because if you can't make that mindset shift into having the growth mindset, this is not a space for you, right? You can stick with the financial planner. After that, we move into phase 2, which is all about getting smarter, right? And just like Warren Buffett talks about all the time, right? Risk is really in things that you don't understand. So if we can start to improve our financial IQ, our mindset IQ, our health IQ, and our relationship IQ, we can really move the needle on looking at, assets like self-storage and other alternative assets, how they could fit into your portfolio, right? So for instance, part of our investment thesis was really coming to the conclusion that, if you invest in equities, for instance, and you buy $1,000 worth of Tesla stock, all you have is $1,000 worth of stock, and all you're hoping for is that stock to go up in value, right? But if we invest in an asset class like self-storage or multifamily, for instance, or even oil and gas, right, you can actually create tax efficiency, right, where you're offsetting the income that you're getting. You're creating predictive passive income that's coming off of the asset. And you're also creating an opportunity for a lucrative upside on the back end. So I call that really the trifecta of investing. But you're not going to be able to discover that until you really realize that, hey, I've got to increase my financial IQ. I've got to look at some of these other asset classes and how they could really support that. We then move into the third phase, Scott, which is all about really creating an infrastructure around your wealth strategy, right? And this isn't your average financial planner infrastructure, right? We're working with clients who want to create 8 and 9-figure legacy wealth. So in order to do that, what do you need to do? Well, the first thing you need to do is mitigate the top 3 wealth destroyers that are out there. Number 1, it's taxes. Do you have a relationship with a proactive tax planner that's really working on creating a strategy to reduce your taxes? If you could reduce your taxes by 10, 20% a year, on top of the returns you could get into, a private investment, you've literally just doubled your return. Yet no one really spends time there. Okay, so creating that proactive tax strategy is really key. Also mitigating stock market losses. There's so many people, right, who are not understanding that, the S&P was down just about 20% last year. Well, over time, where you have to get to this year to get back to where you were is double that, right? So that's why the losses over time really kill people, and people just don't realize the impact of that when you compound it, over 20 years. So stock market losses over time, also 401ks. We literally created a 401k exit calculator where we can show people, hey, even if you pay a 10% penalty, you pay all of your taxes this year. If you did that off of 100K, let's say you took 100K out of your 401k and you would have net investable 55K. If I put that probably in one of, a storage opportunity that you're talking about, I could compound that to potentially over 2 million in 20 years. And that amount, Scott, would probably be, net after taxes, 250K if I kept it in the 401k, right? So it's all these things trying to mitigate some of these big wealth destroyers that are out there. We also do something called infinite.
Hey, Dave, just for a second, I want to pull the thread on the tax piece for just a second. So we've I think as you get, as we grow older, we obviously get wiser, and we get wiser financially as well. And we get introduced to some folks that are doing some pretty smart things. And, it never ceases to amaze me on the tax side. It seems like as we move into a different tax bracket, or perhaps it's just in the rooms that we're in and the folks that we talk with, I'm introduced to another tax, saving strategy that I thought, oh my gosh, where has this been? So you touched on some of the more powerful ones, and I guess the more basic ones, and that is for, public consumption and for most of the folks in the room. But, we've been diving into, some of these, index universal life and different, all types of different strategies that are pretty mind bending, if you will, and just have a greater impact. Has there been anything like that you've run across, or that, say that you're now looking at, there's a lot of folks here in Storage Nation that are doing very well. They're in different tax brackets. They've been at this for a little while. What have you been running across that you're utilizing, or at least digging into, as far as maybe some of the 10% of your tribe and some of the folks you're working with, or maybe even yourself, that is, something that maybe most of the rest of us aren't familiar with, and you don't have to give advice on it or anything else, but anything that you're seeing coming down the pike recently that has caught your attention?
Sure, Scott. So, one of those has been investing in an oil and gas fund that we have. And a lot of investors don't realize that it's actually 100% deductible, and you can use that to offset your active income. So a lot of high income earners, right? This is a great solution for them. And I really think about these things as solutions based upon scenarios. You may be having a liquidity event. You may be, ultra high income. How am I offsetting my taxes? So trying to find that right solution that fits in there. But that's one of the ones we've been using recently, helping people out. And as you say, there are many, but as Tom Wheelwright likes to talk about, if you want to change your tax, you need to change your facts. Right. So, and the way to do that is by creating a strategy, so that every time I do something in my business, with my family, in life, there's a tax strategy to it. Right. So I can tell you here's another tip that's kind of fun, Scott. Right. So vacation, buy an asset where you like to vacation. So my family and I, it was our dream to create go to Italy, right? My wife has roots there and we wanted to go to Italy. So we've had the fortune to be able to take our family there for the past 10 years. We bought a single family rental in Italy. So we fly over tax free and then get to spend time. We have the kids involved in the business, so they're learning how passive income works. They're learning, how this business of real estate works, and we're getting tax efficiency. Plus, I'm getting depreciation off of it and everything else, right? So that's another fun one.
Yeah. Well, I know we could dive into a lot of them, but again, more than anything, it's always good to pick up some of those. And the gas and oil is, I'm sure there's some folks that wrote that one down as well. And that was new to me as I got to know you better and what you're investing in as well. But more than anything, I just want to get folks interested in the mindset of, hey, what do I do next? And that's a very good, that's a very good question that you put up, which is, hey, anything that I do on the financial side or anything I do in my business or in my family's life that is significant, what is the tax strategy behind it? And so I think that's probably the best tidbit. So with that, I'll let you take it from there, but I appreciate that. You always want to be trying to reduce our taxes because that is the biggest wealth killer, as you mentioned, out there, period.
You bet. Another one I'll just add to that, and it's also in this phase, and you had mentioned Index Universal Life. I've been using this with my wife and I for the past 10 years almost, is a whole life, cash value, whole life insurance policy. And we're so bullish on it. We actually got licensed and we're helping our clients with that, essentially creating your own banking system and that's one of the biggest things, Scott, right? The biggest things financial planners will talk about with private investments. They say, well, you have no liquidity. Well, you know what? This is the solution to that, right? You can put that liquidity into the cash value of your policy. It compounds completely tax-free. You can give it to your heirs tax-free. It's got asset protection, and you can create an income stream out of it that's tax-free, in your retirement years if you want to. But the best part is that you have liquidity. So this is where I keep my, 12 months of, reserves that are in there. This is also where I keep my dry powder, right? Waiting for that next deal to come. And a great place for investors as well, when you have multiple streams of income providing passive income, you don't want to just stick it in your checking account, right? It's very lazy. So this is a great place to add velocity by putting it in here. So that's another key piece as really part of your infrastructure and pulling this whole thing together. And then we move into phase 4, Scott, which is all about asset repositioning. So a lot of people might say, oh, okay, I learned about, self-storage or another asset class, and this really makes sense to me, but, I don't have, 50 or 100K kind of lying around, right? Well, what you want to do is really look at, what does your portfolio exist of today? Sadly, a majority of Americans have a huge amount of their net worth tied up in their primary residence. And the rate of return on equity in your primary residence is 0, right? So even at today's rates, even if you were to, get a HELOC or a new refinance for 6%, but you can make 20%, right, on a deal, right? That's a heck of an arbitrage. So it's looking at trying to reposition assets like that. Also, we talked about the 401k a little bit before, or IRA, a lot of those qualified plans. And people often get really misled to say that, oh, well, my employer is giving me a 3% match. That's free money. Well, again, this is why we created this calculator to say, okay, let's look at the entire life cycle of that capital, over 20 years, because you're going to be paying ordinary income tax rates when you try to withdraw that money, which is going to have a huge impact, on your net spendable income that you're looking for in retirement. And by the way, it's probably going to be too late. How are you going to change your game, right, at 65 or 70? So you want to start repositioning some of these assets right now so that you can get really, optimize the value and the velocity that you're getting from them.
And I would add one thing to that too, Dave, and that is, as people are looking at this and the consideration, which I'm sure you're aware of and tell your folks as well, which is, what's the rate of inflation right now? So let's look at where your cash is sitting right now. Let's look at, as you mentioned, the return on your home. If it's sitting there, you're going backwards at the rate of inflation, and you need to be, depending upon what number you peg as the real number for inflation, these days versus what the government states, you got to be beating it. You got to be meeting it or beating it. Otherwise, you're going backwards. And so, there absolutely needs to be a concerted effort and a disciplined effort to be looking at your assets and reallocating them, and what is the return on it, and matching it at the very least against inflation to determine whether you're going backwards or not. And if it's not returning greater than that, then it's time to reallocate and do something different.
100%. So the last phase we get to is phase 5, which we call building massive passive income. So what we're trying to do is build this portfolio, right, of alternative assets that have created a number of things, right? You've got alternative income streams, right, which is starting to get you to some autonomy in your personal financial economy, right? You also reduce your risk by having multiple different streams. We're also looking at diversification through different asset classes, different operators, different markets, potentially even different business models, right? You might put in a brand new storage facility, or you may go do value add, right, to another one. So creating a nice mix of those different business models and things, right? And then this way, you truly have this, all-weather portfolio, right, that can manage through different cycles. And, the way I like to think about it also is that a lot of these assets are actually non-correlated to the markets, right? So they can weather these cycles better. And then also, if you remember back to Maslow's hierarchy, right, with the pyramid of needs, and on the base level, you have, energy, shelter, water, right? So by investing in some of these types of assets that people really need, you're going to be on the right side of the equation if things in the economy change, right? People need a place to live. At the end of the day, people need a place to live, right?
Yep. Mm-hmm. Well, that's a lot to take in, and probably people, I think that may have made people feel a little behind the 8 ball, at least those that haven't looked at this recently. But again, that's the reason why I was so excited to have this call with you, Dave, is because you've got, once again, an incredible following. And let's talk about, if you would, the genesis of your book and how this came about. I can only assume, because when I wrote my first book, it was because there was a whole lot of folks that wanted to, bend my ear and go to lunch. And then after a while, people started to, I would meet them for lunch, and then they wouldn't even offer to pay for my lunch. And so that was the reason that I began writing, to be able to help more folks out. But tell me the genesis behind yours and what that looked like in the beginning.
Yeah, sure, Scott. So, for me, I mentioned I built a tech consulting business, so kind of came out of the consulting career. And as I was trying to explain this alternative, methodology, or just to explain to friends and everything that, hey, I've invested in these alternatives or these privates, this is how they've done. These are the tax efficiency. I mean, it would literally glaze over people's eyes, and they have no idea what I'm talking about. Taxes, you just have to pay taxes. People just don't get it, right? So I wanted to create a way to really instantiate my 20 years of learning lessons into something that I could share with people, things that I could share with my kids now who are in their 20s and they're going out into the world. And how can you think about things differently than we were all taught? And no matter where you are on your journey, I mean, we work with, very, successful people, whether, they're doctors or entrepreneurs. Nowhere in life are we taught financial education, right? In fact, we're taught the opposite. We're taught from Wall Street that this is too complicated and everything. So you're not going to be able to learn this. So let us manage your money for you, right? But as you start to break this down, and like I said, put it into these kind of distinct phases and learn more about it and create a strategy, that's how you can build legacy wealth for the long term, right? Wealthy people are making decisions for 25 years, not the next quarter, but for the next 25 years. So how is that going to impact, the next generation? So if you can have really this kind of framework with which you operate, you can also do better from an investing perspective, because investing is very emotional, right? People want to move in and out of things. It's not going well, so let me sell, but you want to be in things really for the long term. And when you have that strategy, you can yield the best results.
Mm-hmm. Well, that's, again, as Mike Tyson says in his infamous words, everybody has a plan until they get punched in the nose, and not having a plan at all is the only thing worse than that. So let's talk about a couple of the questions that I have. But before that, how do people find you? How do they get in touch with you on the socials, as well as access to your book?
Sure. So the best place is go to our website, pantheoninvest.com/wealth-strategy. And you can download a free copy of the ebook version of this book. If you join our investor club, we'll send you a free copy of the book as well. That's really the best place, Scott.
Okay, perfect. So let's talk about your club, about the tribe that you've built. You didn't really set out to just be a one and done. You've built a community. What can people expect when they step into the club, and what does that look like to be a member?
Yeah, sure. So we're actually, it's been a very interesting evolution, Scott. We really like to lead with value. And like I said, I think this is about solving problems, right? This is about solving, some people's greatest financial problems, putting all of this together, like I said, in this comprehensive approach, rather than being someone who's just transactional in nature and we're providing, okay, we've got another deal and things like that. We pride ourselves in trying to come up with exclusive deal flow, right, with some absolute, top performers, so that we can bring the best opportunities to our investors. But we also work with, like I said, that infinite banking. We help our clients really structure that so they can add, all of those different features to their portfolio. And we're actually rolling out a mastermind that's coming out shortly for people who want to go deeper, because we have a huge contingent of our audience who really wants to get deeper with tools and calculators and have a dashboard of, how is your actual, portfolio, performing, right? How can I see that? How can I set goals against that, right? How can I kind of learn from the best, in these different domains? So we try to give exposure really, again, holistically around this whole concept of wealth strategy. Mm-hmm.
Well, Dave, I appreciate that. And now the burning question is, tell me about your vision board and how you went about creating it, and share as much or as little as you would like with the group here as to, what your vision is for you and your family, and the lifestyle that either you have created or you're continuing to create.
Yeah, great question, Scott. Appreciate you asking that. It has been an amazing journey. And like I said, truly, quadrupling the size of our family, having 4 kids, has just been really amazing. And the family is what drives me, and trying to do the best. So, our kids, can learn this. They can also have these values to pass on, and not just money, right, to future generations. So is really all about, trying to, create this positive mindset and infrastructure with our own family, have the values that we can pass on, like I said, and really always creating a future that's bigger than your past.
Mm-hmm. I love that. And, as we're talking about setting vision, we're not too far into 2023 yet, that some folks can, revisit their goals. We don't set resolutions around here. We set goals for the year, and the 3 and the 5 year as well. I'm just going to stress to everyone, don't limit yourself, and go ahead, and it's okay to dream, and it's okay to write that dream down and turn those into action steps as well. It never ceases to amaze me that when I set out the big, hairy, audacious goal, the stretch goals that I think are just, there's no way that they're going to be achieved. I don't always hit them, but boy, if you're not striving towards them, you're never going to even come close. And there is power in the vision board and manifesting that, but then also taking steps and galvanizing and getting a team around you to support you in that effort. And so it takes a tribe, it takes a community, which is what you built as well. So I commend you for doing that. And I also failed to mention at the beginning of our time here together, Dave, thank you so much for your service. I appreciate that. And I am thankful for the country that I live in and the ability to do what I do. So, and appreciate you as well.
Awesome, Scott. Yeah, really grateful for the opportunity again to be here, connect with everyone, and happy to add value to anyone who's interested.
Yeah. Well, what is we're not big on advice around here, Dave. We're bigger on sharing experience. And so can you point back to either way back in the beginning of building your business or even recently, one of the best experiences you had that was, maybe changed the course or at least was a lesson that you learned through that experience that, set you on a different path, or is something that is now maybe a benchmark in your business that you learned from that you wouldn't mind sharing with the folks?
Sure, Scott. Look, all growth starts with honesty, right? So it's very important to be really honest with yourself. And I think many of us are afraid to fail, but failures actually create the most success. So one of the biggest turning points I had was in my tech consulting business. We had literally been running it 5 years, double, triple digit growth. We had won the Inc. 5000 award. I had a full executive team, a big staff. We were hitting on all cylinders, doing really well. And we did serve part of the government market at the time, and something happened called government sequestration. So a lot of the projects that we had in the pipeline, the pipeline as well, existing projects, everything came to a halt. Right. So we rolled off of like 5 years of amazing growth. And then, within 90 days, we were completely underwater. By some large sums. So, this created really amazing transformation to be able to learn. And we had to make some really difficult leadership decisions and kind of restructuring the team, letting some people go, and then really reinventing the business around, what was important, how to diversify. And that's how I also, Scott, really speak with a lot of passion with this. So when I talk about that infinite banking concept, right, around protecting your capital as an entrepreneur and an individual, this isn't only about multiplying your wealth, it's also protecting your wealth, right? So that was a really important lesson that I learned. This was going great, but I had all my eggs in one basket.
Yeah, there's several wise people through the years that have taught me some really incredible lessons by what they had learned through adversity and their challenges. And one of them was just what you mentioned, framed another way is keep what you got and get a little more. It is so important to protect what you have while you're growing. And I think so often it's because it's probably easier and it's more tangible to see, that you can go out and, see what you kill and drag it back to the cave versus, taking a look in the back of the cave to see how much you've gotten. Has it dwindled? Has somebody stolen it? Where's it all gone? So, very, very good words to live by. So, Dave, appreciate that so much. Once again, appreciate our time together. One more time, what is the best way for people to be able to reach you?
Yeah, the best place is pantheoninvest.com/wealth-strategy.
Well, Dave, I hope to have you back for round 2 as we begin to talk about other ways to be able to protect. I think we just scratched the surface with your many, many years of experience and all you're doing to help folks out. And again, as we head into a changing economy, I think it's very good to have the best minds on here that are at the forefront and who are keeping their ear to the ground, but then also with the strategies as we change and as we navigate through this as well. So thank you again for your time, my friend. We will put all of your contact information as well as access or where to access the book in the show notes. And until next time, I look forward to our next conversation or being in the same room with you again, Dave.
Great. Thanks, Scott. Looking forward to it. Definitely.
All right. Will do. Thanks, gang. Take care, everyone. Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.